What's good, y'all? It's your boy Zo, and I'm back with another video. Now look, y'all already know how it go. Before we start the video, y'all gotta do your boy 3 favors. Make sure y'all go in the comment section down below and check out me and my girlfriend channel. You know, go and like up all the videos on that channel for your boy, you know, sub up. Also, if y'all want to learn how to trade from the person that I learn how to trade from, the link gonna be in the description. Division1trading.com. I mention it in every video. We just gonna keep it short and simple today. Also, make sure y'all hit the like button on this video and subscribe to the channel if you're new. At 10K subs, I'm doing the FCMO challenge giveaway, so you could get your chance to win that if you just like, comment, and subscribe. You feel me? It's that simple. Also, yo, follow me on IG. My IG is gonna be on the screen somewhere at Kenzo. I follow some of y'all back. And the last thing is, if y'all want to join my signals chat, it's $30 a month. Click the link in the description for everybody that's new. I got a free Telegram chat where everybody just coming in, we just talk about trading. But if you want to get into my paid signals chat, you can just come in that Telegram chat and just, you know, ask for my assistant or ask for me, and we'll get you into the signals chat. The signals chat been going crazy. So we about to get into this video. So the video I'm gonna be showing y'all today is just an updated video on the moving averages video that I showed y'all before. That time I did it on gold and US 30, but it works for everything, right? But I'm gonna show y'all a method that works that you can try to like incorporate in your trading, especially if you already in a trade and you see something like this, you will know to hold the trade or to let it go. Look at the markets right now. I'm about to switch over to my screen so that I can show y'all the chart. We finna break down the trade that played out and y'all can see exactly what I'm talking about. So if I hide this camera right here and make it smaller, if we look at the chart, right, y'all can see what we see. Hold up. Okay, it's not too dark. All right, cool. If y'all look at the charts right now, y'all can see that down here we got a moving average cross during London session, right? Right, this is the London session inside of this box right here. But right before London session started, right? It's actually exactly when London session started. We got this moving average cross, right? Price started to move upwards. And y'all know that during London session is the most volatile trading session, right? It's London and New York. So you want to get a trade within either one of those sessions if you can, right? So let's look at the market. We get this big bullish push, right? Which gives us this moving average crossover. This is the 13 moving average and this is the 50, right? The 13 and 50 is the only one I want to use for this strategy, right? So basically what you want to do is, it's this thing that people call the first bounce. That means anytime you get a moving average cross, price comes back and touches one of these moving averages and then continues in the direction that it was going, right? But we call that the first bounce. So basically what you want to do is you want to try to get in off this first bounce. It could be either this line or this line, depending on which way the market is going, right? So like I said, our first bounce is right here when it came back to this red EMA, which is our 13. So we want to place the trade right here, right? Place the trade off that first bounce, and we want to put our stop loss below the other EMA, right? We on the 5-minute chart, so they shouldn't be that spaced out, right? Especially when you taking the trade off the first bounce. So we're gonna put our stop loss below the first EMA, right? So we can actually just put it right below this candle, right? So now we got a 10 pip stop loss, basically like a 9-10 pip stop loss. So what happens? The trade ends up giving us 42 pips during London session that day, right? Beautiful trade. Let's see if we can find this again. So let's see. We wanted to be something perfect. None of these look that good. Oh, let me go over this one more thing right quick. Another way that you could have did this, right? Y'all see how we got the push up, we got the MA cross, we got the first bounce. You could have literally entered this trade once you've seen this engulfing candle, right? That would have let you know that, okay, it's following this moving average, right? We rejected it and we got an engulfing candle off of it. This engulfing candle was real strong. It took over 3 candles, right? So you could have took the trade, you actually could have placed the trade right here, right? Off this closing of this engulfing candle, wrote it up for 33 pips, right? It came and put you in drawdown a little bit, but you ended up eating, right? that's another way you could have took it if you missed out on the first bounce, but you still was able to get in on that same candle, right? So let's look at another example right quick. So, okay, cool. This is perfect. What's happening right now? We get a moving average cross, right? We get a moving average cross right before London session, right? Price push down. We come back up into it, right? Price come back into it. Now this one gets kind of tricky because it's like, okay, which one do we consider the first bounce? Is we gonna consider it being this one where it actually touches the line, or is we gonna consider it over here, right? Now me personally, since the moving average cross happened right here, right? And we get these green candles start pushing back up, I probably would have took the trade off of this candle right here, right? Once I seen it give us this hammer, because this is really considered the first bounce, because price, the MA cross right here, we push back up, and then we get a first bounce off of this one, right? And it touched both of these EMAs and still continued to drop. So you could have took this trade off the closing of this one, right? And look how many pips you secured. I mean, you actually got way more than that probably, but yeah, you got way more than that. Let's see. Just off that one setup. Like I say, we take the trade here. You caught 73 pips off this trade in one day, right? So let's look at this again. You could have literally took the trade again right here, right? We see that price is still respecting these moving averages, right? The way that you know if you can hold it or not is depending on if the moving averages are starting to space out from each other, which they are, right? So what happens right here? We get this bullish candle right here. It don't go too far, but then we get an engulfing candle that happens after that. So we could have literally placed the trade here, right? Like I said, we want to try to hold this trade and we get 50 pips out of it. Now my daily goal is only 30, so I would have been out of the trade right here. And to be honest with you, if I took the trade up here, I'm out of it literally like right here somewhere, right? So I'm not even in the trade for that long. But let's try to find one more example for y'all, just so y'all can see exactly what I'm talking about. Let's look. Okay, we got this example right here, bro. It's literally like every single time. 5-minute chart only is what I'm doing this on. So we get this moving average cross right here, right? I'm taking the trade off of this one because I see price try to push back up, right? This next candle open right here and it pushed up towards the EMA, right? It don't exactly touch the EMA just because the EMAs move, right? So it might have been exactly on the EMA, but then the EMA moved and then, you know, whatever. But price came back up towards the EMA and rejected. I'm taking this trade here, stop loss above the blue EMA, right? So it probably would have been at the back of this candle right here for 10 pips, and then we end up getting 40. But y'all see how this is happening over and over and over every time we take it off that first bounce though, because that's putting us in the trade early. We might not be able to get it every time right exactly as the EMA cross. Let's look at it one more time. It actually happens. I wouldn't really consider that one as one I would have did, but let's see. Okay, let's look at this trade right here. This is not a pretty example, but it still played out, right? And that's why I want to show y'all this example, because every single time the market not gonna give y'all a pretty setup, right? But if we looking at price, what happens? We get a moving average cross right here before London. Right during London session, right? The moving averages cross over, we push up, we come back down to get that first bounce, right? And what do we say? We take the trade off this first bounce, so we get in, right? Stop loss below the other EMA. Whichever EMA it first bounce off of, I'm putting my stop loss below the other EMA, right? So my stop loss roughly like below here somewhere, maybe at the wick of this candle, right? And that's 13 pips. That's a 13 pip stop loss. Me, I'm making my thing 10 pips every time, so I would probably put it here. So a 10 pip stop loss, right? It didn't get hit. We only went into about 2 pips drawdown, and price ended up giving us 77 pips. But you see how this one don't even look as pretty as the other examples? That's because the market not gonna give you a pretty trade every single time. sometimes you're gonna have to take these ugly setups, but that still meet up to your requirements, right? So one more example of this first bounce. So let's look at right here. This happened during New York session, right? What happened? Price gave us this moving average crossover, right? We come back up to touch, give us that first bounce off the EMA. And what happens? It gives us a mean wick on this candle, right? So knowing me, I'm gonna hop in this, right? Stop loss above the other EMA. So, and I'm gonna try to put it at a candle always. So we're gonna go about like 6 pips. But look how much the market give us, right? This was only about a 17 pip move, so it's not that much, but this is on Euro USD. If this was on GBP USD, it would have played out way better. That 16 pip move would have probably been like 40. But I'm just showing you on here just because it looked cleaner, and you know, you can easily just see what I'm talking about. But yeah, that's for this one trading strategy. Like I said, my channel was gonna be a channel where I'm just going over all types of different strategies in the market that I've come across as a trader. Every single strategy is not gonna be a strategy that I use on a daily basis, but I'm still going to go over certain strategies that I might not use, but I still think work, right? So y'all can incorporate this in y'all trading and see how it plays out. Like I said, just take it slow. Trade it on a demo account or something before you start trading it with your real money, just to see if what I'm talking about actually works, right? You want to back test everything. Just don't take nobody's word for something just because they get a lot of views on the video or something like that, right? But like I said, I'm gonna see y'all in my next video. Make sure y'all go and subscribe to me and my girl channel. The link gonna be in the description. Make sure y'all follow me on Instagram at I'm Kenzo. I follow some of y'all back. And make sure y'all like, comment, and subscribe on this video because we about to hit 10K subs. And at 10K subs, I'm doing the FTMO challenge giveaway. So yeah, I'm gonna see y'all in my next video. I appreciate y'all the love and support. Peace.